Well, for more on this, we're now being joined by Rahul Arora, CEO, Nirmal Bang Institutional Equities. He's joining us live from Mumbai. Welcome to the show.
Good morning. Thank you for having me.
Yeah. Now, Rahul, can you explain the euphoria behind the Indian markets rally following the sell-off on election result day?
So I think obviously the election results were a bit of a setback. I don't think anyone expected the incumbent party to be getting a minority. But I think as time went on that day and the subsequent couple of days, and I think the market digested the fact that it has two stable coalition partners. I think it was taken in stride. I think what's also helped is the subsequent cabinet allocations. I think there's a huge relief in terms of continuity of policy. I think the four large portfolios, finance, external affairs, defense and home, being rested with the incumbent candidates. So I think to a large extent that ensures continuity of policy. And I think overall, I don't think that situation that arose on election day where people thought this would be a fractured mandate or the incumbent would not be able to form the government, that was laid to rest very quickly. I think as we speak today, the market is at all-time highs. And I think the market is keenly awaiting the budget, which should be presented in the next month and a half.
Right, Rahul, you speak of how the market is awaiting of the budget, which will be presented in the next month and a half. My next question is to follow up on that. Will the budget be the next big event for investors in India?
It's an interesting question because I think between now and then, there's a lot that will happen. Most important, of course, is the monsoon. And I think if we don't have a good rainfall over the next month and a half in the run-up to the budget, we could expect a slightly populist tilt. I think even if that were to happen, I don't think the market would scoff too much because you would remember not too long back, the RBI issued a dividend to the government of India. The expectation was about 80 or 90,000 crores, and that number was in excess of 2 lakh crores. So I think the government of India has about 0.3% leeway on fiscal deficit, were it to even go slightly populist. But I think the Prime Minister has spoken at length over the last many years about indigenization, Make in India. And I think some of those themes may continue to find resonance in the budget as well.
Right, for better understanding, Rahul, if you can just give your assessment on what will the investors look out for in the upcoming budget?
So I think, there's been a lot of productivity-linked incentive schemes, or what we call the PLI schemes for the manufacturing sector in India. I think the investors would want to see a continued intent towards supporting infrastructure, defense and manufacturing in India. These sectors have been doing well in the run-up to the elections and even post the elections, post that one-day blip that we saw. I think if there is no material slippage on the fiscal deficit side, I think that will be taken positive. And I think, at the margin, I think anything incremental in terms of spending on the defense sector, because it's been a theme that investors have lapped up, quite aggressively. I think if there is some talk or intent in that direction, at a personal level, of course, I would like to see a little bit more done on the education and the health side. But like I said, I don't know how much leeway the government of India has. But I think the two key things to watch out for would be continuity on taking manufacturing as a percentage of GDP to 25% over a longer period of time, and not too much by way of fiscal slippage. I think if these two add up, the tax projections, I think, will be by and large okay, because I think most of the indirect taxes are anyway subsumed into GST. So I think if you look at about a 15% growth in tax income, plus or minus, I think should be okay. So if there are no negative shocks on these three parameters, I think the market will digest the budget pretty well.
My last question to you, Rahul. Apart from the budget, what other big events will markets be tracking in the short term?
Right. So I think first, like I said, I think will be the progress of the monsoon over the next month and a half, because inflation is still hovering close to 5% as opposed to close to 4%. So that's one. The second, of course, is going to be the result season, which starts in a month from now. I think the IT companies will probably start declaring around the 8th or 10th of July. So how the first quarter of this fiscal earnings pan out. The third, of course, will be, whatever commentary is coming out of the central banks. I think now it's almost given that there'll probably be only one rate cut this year by US and India. But if there is scope for more, I think that could be, something to watch out for. And lastly, I think the union budget. So I think over the next 30 to 45 days, I think these 3 or 4 things will play a key role in determining market action.
Right, absolutely. Thank you so much, Rahul, for joining us on the show with your insights on this.
Thank you.